loan pricing, and we are specialists in MSR valuations and CMSR valuations, which is just commercial mortgage servicing rights. And if you're an originator of product as a mortgage company and not a bank, the largest asset on your balance sheet might be the mortgage servicing rights that you retain when you sell the mortgages into Fannie or Freddie, which are the 800-pound gorillas that buy most residential mortgages that are originated. And so the movement in the value of that mark-to-market asset can wipe out the mortgage company's equity. Then they lose their license to service. So because that would be an existential event, they want to prevent that. And we have a unit that does nothing but help mortgage servicers to hedge the value of their mortgage servicing rights so that their equity capital is not wiped out by a mark-to-market event. One of the reasons that I think the accounting rules are incredibly stupid when it comes to mark-to-market. I've never believed in the value of a mark-to-market accounting for assets that are not immediately trading assets, but the accountants and the regulators differ with my opinion. So we make a nice living for a number of people hedging that. We also help originators hedge the pipeline risk of new originations. If you are buying a property, a house, you may go to the mortgage originator and say, but if interest rates rise, I won't be able to buy this house and I'm entering into a contract to buy a house. And they will tell you, well, if you pay us $500, we'll lock your interest rate for 3 months. That gives you enough time to close. He sold you an option, and that option is part of a pipeline of new originations that haven't yet happened. But they have to offset that risk, because if they don't offset the risk, a really bad thing can happen. They can actually sell the loan for less than the money they put out a day or two earlier. So to lose 2 cents on every loan that you originate is a bad thing. What you want is to make 2 or 3 cents on every loan you originate. If you can't do that, you can't pay the people that work for you and you go out of business. So hedging the pipeline risk is important, just like hedging the MSR is important. MIAC has a unit that constantly does that. And there are many small originators that are not used to selling into the agencies on a regular basis. We have a unit that helps them clean up their data and connects them to the loan origination systems at Fannie and Freddie so that they can pipeline their stuff right into Fannie and Freddie, mortgage delivery services. So at a high level, MIAC is an expert on mortgage rights, mortgage servicing rights, mortgage loans, but we also do other stuff. We do a large number of valuations of consumer loans, unsecured, fintech loans. We work closely with Upstart. They license our software. We do auto loans. We do tons and tons of commercial mortgages. We also do unsecured commercial loans, or commercial loans that are secured by inventory, accounts receivable, and equipment. So all of these different loan types, we have specializations in. Early buyouts. When loans go into Ginnie Mae pools, we frequently see clients buying the loans out because they become delinquent. They buy them out at a discount, get them cleaned up and performing again, sell them back. So they make a premium by buying them out cheaper than they sell them back. And that's a huge business that's been going on for years and years. I have a guy on my team that does nothing but look at the relative pricing levels, and he is tuning ongoing valuations we do of EBO pools that are moving in and out of the large government securitizations. So from a high level, that's what MIAC does. And what I do is I run the unit that handles whole loan valuations, risk retention analysis for securitizers. That's a legal requirement that was put in place with the Dodd-Frank Act in 2009. They are required to hold at least 5% of the risk, and they can do that one of several ways. If they hold 5% of every bond, then they don't really need us. But if they hold 5% of the bottom bonds, or maybe 3% of all the bonds and 2 or 2.5% of the bottom bonds, they need us, because you calculate it based upon the market value of the bonds. So you have to calculate the market value of every bond and then roll it up in order to be able to calculate the risk retention properly. So we do that kind of analysis. We have a software tool that's built into our whole loan calculator tool called Bond Agent that actually structures the bond waterfalls so that we can do the valuation and the risk retention.
That's a lot.
Does that give you a lot? Does that give you enough?
Stop.
Basically,
MIAC is an interesting firm for us quants, because it usually we deal with stocks and bonds and portfolios. And I think MIAC is interesting because it does deal with the whole loan market, which frankly, and we were discussing yesterday with everyone at lunch, what's happening is, we don't, the curriculum, right? They don't talk about loans until you go to work, and then you work for a bank. So everything is tied around stocks and bonds and derivatives. But the loan market is not really and it's a shame, because it's an illiquid market, meaning that you do need to evaluate those things all the time, and it's much tougher to know what's going on. Wangxi, what was it to work with the Dean and MIAC? Because you interned there for a while.
Yeah, I mean, it's always happy to learn new things, and I think MIAC has a very good training session. And so for me, there will be like 4 weeks or about a month training session from Lisa. And also when you get into MIAC, the first week, a lot of staff from MIAC, they will be love to teach you, and everything you don't know or not familiar with, you can just call them, and they will be very happy to help you with. And also, I'm not sure how many of you know Hua. He's also from MFE program, and I asked Hua a ton of questions, and he will always be there and help me with that.
It's amazing. So I was wondering why he wasn't working the whole time you were there.
Yeah, my bad.
The good news is, if you intern with my team, you won't even see me most of the time. I'm off doing other things. You'll get to work with Hua, and you'll get to work with Ira, and you'll get to work with Karsten or Jenny. Those are all people on my team. Or you may be working with somebody in Bangalore, or you may get a project where you really don't have to deal with anybody. You have to figure it out on your own. And I just check in with you every once in a while. So